Piper Sandler analyst just came out with a note recommending investors to buy Tesla before the Robotaxi event in October. We're finally starting to see Tesla big whale investors and institutional analysts now understanding the real potential of Tesla energy and full self-driving. Today, we're going to review the 12 points they had on Tesla energy and also the 12 points they had on FSD. Plus, Tasha Keeney from ARK Invest also came out with new information as she tested Waymo's autonomous vehicles in Los Angeles. We'll share with you what she found out. This comes as Waymo themselves announced their new 6th generation hardware with 13 cameras, 4 LiDAR sensors, 6 radar sensors, and external audio receivers. Waymo's claiming this new setup is more cost effective. I've got Hans Nelson joining us. Hans has got his own YouTube channel called Hans C. Nelson. Thanks, Hans.
Thanks for having me, Herbert.
So these are perfectly lined up for you. We're talking about energy, FSD, Waymo's new announcements, and other AI stories that just came out that are important for Tesla. So this is Piper Sandler, right? And they had this event, 2 events actually. They held 2 Tesla events, and they came away with these 12 takeaways from each of these events, so 24 takeaways. So Piper Sandler analysts recently hosted 2 Tesla events to dive deeper into companies' evolving strategies in both energy and autonomous driving. The first event was they visited Tesla's new Megapack factory in Lathrop, and the analysts gained insights into Tesla's growing stationary battery business. So they finally visited Tesla's Lathrop. They should have probably done that a year ago, but now that Q1 results and Q2 results are shocking everybody, they realize, this was real. The second was a webinar they had with Elias Martinez, the creator of a community tracker that monitors real-world data from Tesla's full self-driving software. Elias has this website that's tracking FSD, but from community people that are testing FSD. So these Piper analysts, they reiterated an overweight rating on Tesla, price target of $300, and they're urging investors to own Tesla stock ahead of the upcoming Robotaxi event in October. This is great. Finally, they're listening. What's your thoughts on that?
Yeah, I was actually just reflecting on this over the weekend, listening to, there's a lot of commentary from people that I highly respect, like the BG2 podcast, for example, or, we heard commentary from Eric Schmidt over the last few days on the video from Stanford that has now been heavily censored, that basically reflects there's a consensus that we kind of know right now that we're in an AI investment bubble, that all of the big AI, especially generative AI companies, whether it's OpenAI or Anthropic, and Meta's pouring tons of money into this, Google's pouring tons of money into this, Microsoft is obviously pouring tons of money into this, but then even in the startup ecosystem, there's just like tons and tons of money that's being sprayed onto this specific vertical, which is why NVIDIA is just hoovering up, like almost all that money ends up in NVIDIA's pocket, because it takes NVIDIA hardware to do this training, regardless of what style of generative AI that you're doing. But we kind of recognize that this is a bubble, and that a lot of these companies or a lot of these things that we're doing are not necessarily going to be successful. And there's a high amount of risk, if you're putting money into any one of those companies, that money is not going to translate into a product that produces a positive return on investment. So it's interesting to think about the fact that while that is the case, you have Tesla kind of over on the side, and because they are not at the center of this insane AI investment bubble, and they've got automotive, and we've been talking about FSD for so long, and it's still not here. Like, there's a couple of narrative factors that prevent people who are extremely interested in investing in AI to consider Tesla as an AI-based investment. And there's definitely risk involved in investing in Tesla for AI. It's not zero risk. I will 100% concede that fact. But in my personal view, there's a much higher likelihood that Tesla specifically is going to be successful at monetizing their AI research than almost anyone else. What I like, OpenAI is a good example. They're going to monetize. They do monetize currently, but can they monetize in a way that is sustainable as a business that offsets their costs? I mean, Sam Altman believes it's going to take 300. Never mind. I'm not going to go. There's a huge number of the investment that he thinks is necessary in order to reach AGI. And so, like, you have to have a pretty compelling business model on the backside of that in order to justify those types of investments. And there are huge question marks around that. And so, because that's the consensus trade is, hey, we're just gonna throw money at anything and everything that's even attached to this space. um I think it's more likely, your risk reward ratio investing in something like Tesla is better, and especially ahead of this robotaxi event, when I think that's when, depending on what they release, we could begin to see that recognition by these AI investors that, hey, if I want to be serious about investing in AI, I need to have at least a piece of that investment going towards a company like Tesla.
That's a very, very good point. I'm glad you made that. It's so important, right? Everybody's throwing money at AI. They don't think Tesla's an AI company. And in fact, Tesla's the only one that is using AI for real world revenue and business model. Everyone else, you don't even know what they're doing and why. So here's what Piper Sandler said, what they noticed after visiting the Lathrop factory. So first of all, they said that Chinese companies are ramping up competition in stationary battery market, but demand remains strong globally. So yes, there's going to be a lot of competitors, but this demand is going to outstrip suppliers very quickly. By 2030, the market will need approximately 2 terawatt hours of batteries, a 20-fold increase from last year's levels. Yeah, that just alone, just imagine what Tesla's going to be able to do here. They'll be able to take advantage of that. As battery technology matures, hardware could become a commodity, and so Tesla won't be able to compete solely on price. Having said that, guess what? Tesla leverages its full ecosystem. It has incredible AI-focused software and inverters. So it's not just focusing on offering the lowest battery pack, but it's actually the full ecosystem to win those contracts. Chinese competitors are largely absent in the US because these are long-term assets that require ongoing service. Plus, you need to build a factory here in the US. They're expensive. They're very heavy. Geopolitical factors and the location of factories pose challenges for Chinese suppliers in the US. That also. So a megapack can weigh over 80,000 pounds. So you can't really ship them like you could cars. So it's important to have local production. And then we'll talk about the new facility in Shanghai, which we reported on, expected to be online in 2025. They're already 45% progress in building this, and it's just been 3 months since they started. 3 months. So Tesla Energy operates on a project basis, leading to fluctuations in quarterly results, which makes long-term forecasting challenging. Before I continue on, what's your thoughts on the points that's been made?
Yeah, I think that one of the big takeaways was from, can you go back to just put point 3 on the
Mhm.
screen again real quick? So yeah, it was 3 and 4 where it talks
Right.
about the fact that while it basically is just batteries and some, capacitors, some inductors, like some very straightforward hardware to build from an electronic standpoint. The software piece is huge, and then the ongoing service piece as well. One of the things that Tesla's really doing in this space is they are creating essentially the Tesla iPhone or the Apple ecosystem of products
Mhm.
for a utility provider when it comes to battery storage. And we've seen, or at least we've heard rhetoric. I think I would place a little bit of caution around just 100% believing this story. But the story is that there are utility providers who have purchased patchworks of solutions. They're buying some batteries from this supplier and they're using this person's software in order to operate it. And they've got this service contract with these people over there. And, this very disconnected um, system in order to operate these exact battery storage facilities at a utility scale. And after they do that, they come to Tesla and they purchase Megapack products, because while they're a little bit more expensive up front, the value proposition that they add over time, because they're so much easier to manage, they just work better. The whole suite of exact reasons why so many consumers enjoy Apple products, even when the Apple product itself isn't necessarily the best piece of hardware, because they have that connected ecosystem. It just works so seamlessly,
Mhm.
and it requires so little maintenance, and all these types of things. It seems like Tesla is building that for utilities, and obviously that's going to be a longer cycle in order to be massively successful. But I think that once the industry consensus is that that is the case, that you'll see them just kind of dominate market share, at least here in the US. It will also be interesting to watch how that market share story plays out in the Chinese market, where they will have, kind of a whole different set of competitive factors to deal with.
Okay, thank you for that. That's correct. It's a big deal, the software. So this is just the rest of the 12 points they made about the energy. We already know a lot of this. Tesla Energy operates on a project basis, right? So there's going to be fluctuations in quarterly results because you get money as they implement it after they already made their initial sale. So it makes long-term forecasting challenging. Tesla currently imports lithium iron phosphate cells. They did not tell them on in-house production using cattle machines. Tesla's strategy focuses on localizing or in-source production to prepare for various potential market scenarios, right? And the long-term gross margin is still targeted 20%, which I expect to be much low or much higher than 20% if you add in the services ongoing. What's your expectation about margins?
Um, I'll just say that the targets that have been set forth by Tesla have been roughly 25% margins, and it seems like that's what we have been roughly seeing, and I would expect that to roughly continue until guidance from management changes.
Okay, that's fair. Larry Goldberg, who follows us closely, he actually sees Tesla's energy margins popping up to 30 plus 40%. So that's his
Well, have
current
you?
analysis.
So there was a. Are you referring to him thinking that there was going to be these un what are the UPOs?
Yeah. Yeah.
So they made a correction, and they've decided that they don't think that those
Oh, okay.
performance obligations are going to end up
Right.
being such high margin revenue since then, and that they
Right.
were actually able to speak with someone from Tesla IR, and Tesla IR confirmed that all that UPO that's in the financial statements is basically just contracts that are beyond 12 months out, and given that fact, then they are really subject to the same exact margin
Margins.
profile as
I
all
see.
their other revenue. And so
Mhm.
it probably is going to be closer to that, 20. I would love to see a balloon up to close to 30%, but I think it's probably not realistic at this point in time to expect anything more than 25 to 30.
Good. I did catch that last bit. Thank you. You reminded me. Okay. So the second part of what Piper Sandler did, and we'll get to Tasha Keeney and Waymo, is they actually talked to the guy who created this FSD community tracker. He has this website. 107 users submit data as they are using Tesla FSD because we don't have any other data to kind of follow. Tesla shares safety information, but they don't share as much that they should about how FSD software is improving. So this is the best we can do. So this FSD community tracker, it aims to how quickly Tesla's FSD software is improving in real world conditions. So the last 6 months, 107 users submitted data using 6 different input methods. Data submissions tend to increase in the 1 to 2 months following the release of a new FSD software version. So participants in the tracker, they think are generally diligent, level-headed, and objective. They use FSD regularly. Of course, there's biased outliers. They can be identified and removed from the data, so that's fine. The latest FSD version, 12.5 in series, can travel 220 to 250 miles between critical disengagements, marking an improvement from previous versions. And he says it's challenging to use these absolute numbers, but what matters is, and so you can't really compare direct comparisons between Tesla's FSD and competitors like Waymo. And we know for sure Waymo is in controlled environments, controlled cities, versus Tesla's being used all around the US and Canada and all sorts of different locations, even unmarked roads. Determining the exact number of disengagement-free miles required for robotaxis is also difficult. So rather than seeking an exact number, just look at the improvement trend. That's what's important. And then they also think that 12.5 has improved while it's improved, its performance has regressed slightly since its initial release, potentially because Tesla is preparing for the third gen hardware. Uh, Before we final the other 3 points, what's your thoughts on those first 9?
First of all, it reminds me that I need to actually start submitting my FSD usage data to the community tracker. That's something that I have intended to do, but haven't gotten started with yet. So I would put this out here to the audience. If you use FSD regularly, you should definitely consider contributing data to this effort so that we have more data, better data. Um, the takeaway from Piper Sandler, I think, is it's right on the money that it's just really hard to make any sort of apples and apples to comparison, any sort of apples to apples comparison between Waymo and Tesla because they're different products, different environments. It's just hard, uh, regardless of how you want to try to compare them. Um, so then going back and saying, okay, what's the rate of improvement? And if there was two things that I was wanting to track to decide, is Tesla going to be successful long term in a big way, or is Waymo? If I was looking at Waymo, the things that I would be tracking are, okay, what is the trend of bringing down the cost of their hardware, and the trend in increasing the number of units that they can put on the road, plus how long does it take them to bring a new jurisdiction online? Like those are the critical things that if I'm an investor in Waymo, that's what I need to know so that I can say, hey, is this going to be a competitive thing long term? Because if your costs are too high, you can't get enough cars on the road, and you can't expand to new geographies rapidly, then it doesn't matter if your solution works from a technical perspective. It's going to be too expensive, and it's not going to reach enough customers to provide a meaningful return on investment. When I'm looking at Tesla, the thing to track is, okay, it kind of works everywhere in North America right now. So it's got a very big, um, operating domain. So I don't need to know, can Teslas expand their geographies that they're able to operate in right now? Um, what I do need to look at is, are they making progress in their ability to have fewer interventions and reducing critical disengagements? And unfortunately, from outside Tesla, we just don't have this data very well. We hear Elon talking about things, and we get a little bit of data in a few ways, but it's just not very robust. But intervention data is extremely key overall in that. And what we have here with this community tracker data is some of the best information that we have available to us. And not only is Piper Sandler recognizing this fact and referencing this data, we've actually seen Elon even reference this data here recently as well. And so hopefully we get some more better reporting on that. All that said, we are seeing continued progress, and the speed of progress since we have released version 12 has definitely been faster than the speed of progress before version 12, which is a good sign that we're moving in the right direction. And
Mm-hmm.
yeah, it's just good for Piper Sandler to recognize that. And one of the other tangential things I'll say to this is Alex Potter has been a pretty good institutional analyst on, he's the primary analyst at Piper Sandler on Tesla, and he's been pretty good over the years. Not always the first on any topic, but he's almost always aware of what the arguments are, and
Okay.
he typically comes to solid positions.
And we'll get to Tasha Keeney, also another analyst that seems to be pretty good as far as I'm concerned. So you wanted me to show this because you were saying something like the community tracker, they were able to do something different, but they were able to actually now tell you how much better it is overall. And so 12.5.13 is 14 times better overall, 4 times safer than 12.3.6. This month, 12.5 series already got 1.4 times better overall and 2 times safer than, I guess, the previous series. How did they know
This is
this?
a slightly different form of analysis. If you'll go to the chart, so it
Yeah.
says cross version analysis between FSD versions on the same testers. And so what this person did was they just took the data. So this is not a chart that you can find directly from Elias
Mhm.
yet, I believe. Hopefully he's looking to add this. But what this did was it basically grouped users and said, okay, for this specific user, what is the intervention rate on 12.3.6? Are those interventions critical or not? and then compared that to 12.5 versions. And what we see is this continued progress um,
Yeah, how
in
much better
the
it is.
intervention rate. And so, 14 times better overall, that's a great number that does back up some of the, it's like we heard these numbers from Elon, like, 12.5 is 50 times
10
better or
times.
100 times better, or whatever the, whatever the
Hmm.
numbers were. It's like, well, what data is he looking at that shows that? And this, I think, is a good piece of data to give you an idea of what that might have been, because I think you really do need to control for a user. And they're not only are you
Yeah.
controlling for their environment, but you're also controlling for their specific driving patterns and whatever it is that their environment is throwing at them that causes these interventions. And so this is a cool way to look at the data, and I think it's very valid and valuable.
Nice. All right, let's get to the next thing. Waymo and Tasha Keeney from ARK Invest. So just now, Takedra Makwakana from Waymo posted this. We're building a safer future one ride at a time. I'm thrilled to share that we're just surpassed 100,000 paid trips per week. Congrats to the Waymo team for this incredible milestone, now serving over 100,000 paid trips per week. Omar from Homar's catalog pointed out that that means that they're doing 5.2 million driverless rides a week now. That's double the level of just a few months ago. Also, Tasha Keeney posted this. So she had the opportunity to ride in a Waymo, an autonomous vehicle in Los Angeles, and this is her experience. There's a wait list to get access to Waymo service in LA. Once in, this wait time for my ride was notably longer than Uber, over 10 minutes compared to Uber's 2 minutes. Additionally, the pickup location wasn't exact. I had to walk a short half-block walk. Despite these inconveniences, the ride itself was very smooth. The car even pulled over gracefully for a police car with its siren on. Another positive, this Waymo ride was priced 8% cheaper than an Uber X, yet the vehicle quality was comparable to Uber Comfort. This is key because we believe that lower prices will be a major driver of autonomous adoption. However, for meaningful consumer response, its savings may have to exceed 80 cents that I was more than exceed the 80 cents that I was spared. Exactly. 8% is just not big of enough of a deal. But that's the whole point of driverless cars to be much cheaper. Overall,
Especially
it's
if
clear.
it's
Yeah.
slower.
If
If
it's,
you're
yeah,
saving 80 cents on your total ride, but it wastes, 10 extra
8 minutes.
minutes on your trip,
Yeah. Yeah.
then, that's not a trade-off that consumers are going to make. So if, especially if it's slower, it's going to have to be way, way more discounted. Obviously, I think there's room to make that happen at Waymo if they can solve their challenges long term on their, costs. But yeah.
Yep. Well, we'll report on Waymo's new press release that they launched just yesterday. It's clear that Waymo is slowly but surely expanding its service. Recent announcements of new testing locations and expanded operating areas in LA and San Francisco. However, the limited fleet size seems to be contributing to longer wait times and the ongoing wait list. But that's still good. That means people want to try it. Additionally, while my ride was smooth, there are reports from San Francisco 4 a.m. honking disruptions at a Waymo parking lot, signaling that some technical issues still need to be resolved. Looking ahead, it's worth noting that if Tesla can successfully launch its own robotaxi network, its vertically integrated approach could allow it to scale quickly through its own auto production, supplemented by customer participation. In addition, rumors suggest Waymo's vehicles cost over $100,000, a stark contrast to the $40,000 Model 3, and that's before any federal or state credits. And of course, who's paying for that, right? This is consumers are paying for the $40,000. While Waymo's true costs could be lower, the Gen 6 platform, which they announced, is likely some improvement on current costs. Given a sensor suite and integration costs alone, a wholly owned automotive manufacturing business is likely a key advantage. In the short term, high vehicle costs could impact capital investment and initial profitability, though long term, the utilization rate will likely be the key lever for reducing cost per mile. So she continues and ends by saying, if Elon's predictions hold true, we might soon have the chance to compare these services directly. He has high confidence Tesla could deliver a fully driverless experience by the end of next year. So let's talk about the 6th generation hardware, but what's your thoughts on what Tasha's experience was?
Yeah, so I mean, I hadn't even read most of Tasha's things, and I think she pulled out a lot of the same things to monitor for Waymo and their success that I mentioned earlier. And the cost of the hardware being an obvious one, that is just key. And they are on a trajectory of lowering the cost of the vehicles that they're producing, so that is a positive thing. But and it will be extremely exciting to see once Tesla can offer this service side by side with Waymo. How long does it take them to provide an equivalent cost and an equivalent customer experience to what Waymo is doing? And then, what is the rate of progress of that cost over time? I think that Tasha's points are very spot on the money, and it's great to hear her perspective, because she has been an incredibly salient researcher and commentator on Tesla, and like the research that she has done at ARC has been phenomenal over the years. I would say she's much more forward thinking than Alex Potter is, and obviously she needs to watch this space closely. And so her comments are very important ones to take into account as you're analyzing this space.
So Waymo also had a press release. They're talking about their 6th generation technology, which they think is going to be more cost effective while offering enhanced resolution, range, and compute power. So more importantly, it's going to be more cost effective. This is what the Waymo car looks like. Oh, one of their cars looks fantastic. Looks like a van. And the new Waymo driver system includes 13 cameras, 4 LiDAR sensors, 6 radar sensors, and an external audio receivers. So it gives you a surround view up to 500 meters in all weather conditions. That's one of the things they're talking about, is that when you have redundancy like this, it allows you to have different weather conditions. So the 6th generation system reduces sensor redundancy while they want more redundancy, they want to reduce it. While maintaining safety, allowing for more efficient autonomous driving operations. They plan to integrate this new hardware into its fleet, aiming to operate without a human behind the wheel in significantly less time than previous generations. So what they typically do is they launch a city, they still have to have a human driver sitting in front of it. Then eventually the human supervisor leaves, but then they have teleoperation. And then hopefully that teleoperator doesn't have to intervene as often. The Waymo driver leverages real-world driving and simulation data to accelerate the development and validation process for autonomous driving capabilities. So this is their press release. What do you think about that?
Yeah, I mean, it's great to see them reducing the amount of sensors that they have. Obviously, they went from way, way, way too much sensor redundancy to just way too much sensor redundancy here. And that is going to be a headwind for them on costs. One of the other things that I would recognize is that I'm fairly certain this vehicle is going to be one that's manufactured in China. And so if there is any sort of geopolitical tension between us and China, and we've got all sorts of, giant question marks in the automotive manufacturing landscape about what it's going to look like to import vehicles from China. That is something that with this strategy, Waymo may really have to contend with in a difficult way. But I do have to say that the ability to operate at superhuman levels in a lot of contexts, like that is something that having the ultrasound, the radar, some of these things that operate in modalities that we as humans don't really have as drivers, there is a potential that could give these vehicles the ability to operate in more conditions than humans could more reliably, which could be a good thing if they can solve the intelligence piece. But solving that intelligence piece is really hard, and I have low confidence. Like, that's not really the reason that they have all these sensors. Is they're saying we want to solve this problem without having to solve the intelligence piece very well at all. And so if you take that intelligence piece off the table, then I am once again very skeptical that you're going to get this superhuman safety performance in a way that is cost competitive.
So just reminding everybody that they announced that they have 100,000 paid trips per week, which is very tiny, but of course it's real. Like, this is real paid trips at this point. This is fantastic that they actually are out there. People are actually taking this. There is a wait time. So even though in a small, very small geography, that's happening. Then what they're proud of is that they're operating in even harsher conditions. So they believe that they can, with this new system, they can ride in extreme heat, fog, rain, and hail. So that's why they've done this. And then where you go? Yeah, here we go. So You know what they don't talk about in their press release is how many miles, but also just data, AI. Do they have a supercomputer? Are they using that to help design this? They don't really mention that at all.
Yeah, they did. I mean, it sounded like they said computer efficiency was one of the factors that the new generation vehicle helps to improve, which you would think has to be the case. Like, you can't not improve the efficiency of the compute platform that you have, given how much progress has been made in this area over the last few years. So that's it, to be expected. And I would say that I really do hope for success for Waymo. While I'm skeptical about their go-to-market strategy in a lot of ways, they are a huge contributor to de-risking the overall autonomy business model and technology, like all of this. That I think, in the long arc of history, regardless of who ultimately ends up winning, in a future where robotaxis dominate the market and a lot fewer people die, a lot fewer people um, have to waste time doing this. Like, people get time back, people are safer, and the technology gets to be so cheap that more people have access to transportation anywhere that they need to go, whenever they need to go there. Like, all of those are huge wins for humanity in the long arc. And Waymo is definitely a very significant contributor to making that future a reality. They have pushed regulators on this standpoint. They have explored the space of what systems do and do not work well here. They do have a working system. So I would say that I'm very much a fan of what they're doing. And I do hope that they're able to be successful. And I think it will require some pivots from here on some of their approaches. But it is great to see. Like, I don't want to detract from that milestone that it shows, that 100,000 paid trips per week. That is huge. And it is a major milestone, I think, for the robotaxi industry as a whole moving forward. And I think that is something that Tesla investors should recognize and celebrate.
So I just took a look, and it looks like that as of today, they've got about 20 million miles driven. Meanwhile, Tesla has 1.6 billion miles driven. Of course, the 20 million miles are paid miles, which is, a lot of that's very, very good. A lot of it is. And number two, but it's in a very specific geography, right? Very controlled geography, versus 1.6 billion miles and heading to 6 billion miles. So this is the difference. 20 million, it's maybe not enough to get all these edge cases. It still works, but in a very, very specific location. And it's very much this, doesn't understand the environment. It just drives around, make sure it doesn't hit something. So we'll see which strategy works. Thank you very much, Hans. Follow him on his YouTube channel, Hans C. Nelson. Thanks, Hans. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.